Hi, this is Ed the Finance Guy. I appreciate you tuning in, watching my videos. Today I have an interesting topic that I think will be very helpful to students, people that were in college, that have student loans. I've been noticing that there's a very, very big issue going on right now with students that are having problems paying their student loans. It's crazy to think what it costs to go to college. It can cost $200,000, $300,000, $400,000 to go to college. But I think the people that are deciding where to go to college, they're not coming up with the right plan right away, and they should start thinking about the right plan. Now, many graduates end up owing a couple $100,000 of college debt, which takes them 20, 30 years to pay off. You really don't want to be in that position to have that kind of a debt, especially if you're going to have a job making $60,000, $70,000 a year and you owe $200,000, $300,000 in student loan debt. It seems like you're never going to be able to pay off the debt. Now, over 40 million people are unemployed. So before you decide what you want to do for a living, where you want to go to school, you should really consider, why do you really need to go to a school where you're spending $40,000 a semester when you're only going to end up with a job making $60,000, $70,000? So what I did with my children is they went to community college for the first 2 years before they knew exactly what they wanted to do. Why spend $100,000 on college tuition when you don't even know what kind of field you want to go into? And maybe you won't even graduate. So it's better to go 2 years to a community college, spend a lot less money. Think about the fact that you're going to have big student loans. Maybe your parents are helping you, or you're taking money that you could use down the road to buy a house, to use it for college education, when you really could just have a 2-year degree at a community college. And then when you know, oh, I want to be an accountant, I want to be a lawyer, then you transfer to the school that you want to go to. You'll have a 2-year degree, and then you'll pay the extra money that you have to pay. But a lot of people that are going into college, they're deciding to go to college because their friends go to that college. They graduated high school with 3 friends. They're all going to ABC school. It doesn't matter that it costs $60,000 a semester. My parents will pay for it, or I'll have student loans. And it's not something I'm going to think about today, because it's going to happen. I'm going to owe the money down the road. I'll make a lot of money. You don't know for sure you're going to make a lot of money. People are graduating this year. There's no jobs. There's 42 million people unemployed. So you have to consider that before you make a decision where you want to go to school. It is one of the biggest debts you're ever going to have. It's not dischargeable in bankruptcy, so you can't think, well, I'll work and I'll file for bankruptcy, I'll get rid of the student loan debt. It doesn't work like that. The student loan debt will haunt you forever, and it's a very, very big killer on a credit report. I did credit repair for over 20 years, so I know that's one of the biggest things. It's almost impossible to get removed from your credit report. So the question is, should I refinance my student loan debt? Do I take that student loan debt and refinance it and try to save some money? Now, the new federal lending rate on new loans, which start July 1st of 2020 and end June 30th, 2021, are at 2.5%. 2.5% is the lowest student loan rate that there's ever been. Now, again, it's only on brand new student loans. So if you have a student loan right now, you're paying 5 or 6%, you're not gonna be able to switch it to a 2.5% loan. If you decide to refinance, which means you're taking a debt that you have and you're trying to get another lender to give you money to pay off the original debt, to either save interest rate or to save length of time. So maybe you're lowering it from 30 years to 25 years, but you're refinancing the debt, so you're gonna have, sometimes you'll have a new lender, sometimes it'll be the same lender, but you're doing this mainly to save on the interest rate. The only way to refinance is to go to a private student loan program. You might save some interest by doing it, but you also have to realize that federal loans have consumer protection, and that protection is death and disability, and you can get discharged for death or disability, where a private loan, you can't. Federal loans also have an access to forgiveness of debt. So right now in Congress, they're thinking about lowering the interest rates on all student loans, or maybe forgiving some of the debt. If you're with a private loan company, you're not going to get that benefit. So there is a negative to refinancing. If you switch from a federal program, you're not going to get the forgiveness of debt that they're talking about right now. Now, refinance may save you money, but losing these extra benefits has to come into your decision. And again, you can't go from a federal loan program to a private lender and then back to a federal loan program. So you only have one shot to get the federal loan program. So before you switch over, because you're going to save 1%, it might not be worth it. You really have to look at all of the different pros and cons of switching and redoing your loan. Now, under the CARES Act, many student loans have a 0% interest. And also the payments that you're supposed to make into these loans, right now they're temporarily suspended, and that could go on for a while. So again, if you switch over to a private loan company, you're not going to get that. They want to get paid, the interest rate is signed, you signed the contract, they want the money. Now, the reasons that you can't refinance, private lenders are not as flexible. So if you go to a private lender, they want to have a certain score. They want to make sure that they're going to get paid. So if you lose your income for some reason, it's very, very difficult to renegotiate with them. Where with the federal program, you can renegotiate with them. Usually you need around a 650 score if you're going to go to a private lender. 650 score is a pretty high score, but if you just graduated college, it's a good chance your score is pretty high because you haven't been around long enough to have bad credit. So a 650 score is important. But the other thing is you might need a cosigner. Now, getting a cosigner on the loan is never a good idea, especially if it's a parent who might be retiring at some point. You don't want to have somebody else on the hook for the loan. Now, sometimes a cosigner can cosign and they have to make good on that loan for the first 3 years of the loan, the first 5 years of the loan, or for the life of the loan. So you really don't want to have somebody else on the hook for whether or not you're making the payment, because down the road, if you can't make the payment, you lost your job, that person is going to be very sore that they signed the agreement when now they have to make good on 30 years worth of payments because they did you a favor. So you really want to try to avoid it, especially with parental signatures. I've seen a lot of parents and children break up an entire relationship because now they're on the hook for 20 years on a loan that they didn't even really want to co-sign for, but they did it because they're your parents. I would try to strongly think about not getting a co-signer. Try to do it on your own. If you don't make the payments, then you're the one that's going to suffer. No one else should suffer for a problem that you're incurring. The other reason you can't refinance is if the loan is almost paid off. Like some people have 15 years on the loan, they have 3 years left. It really doesn't pay to refinance because generally loans work, you pay off the interest first. Like with a mortgage, you pay, the first 7 years is mostly interest on your payments, not principal. So most loans work the same way. The very beginning, you're paying all the interest, and at the very end, you're paying the principal. So if you have 2-3 years left on a 15-year student loan, it's a good chance that that money is all principal and you've already paid the interest. So why bother to refinance? It really doesn't make sense. Now, if you have different student loans, some people went to different colleges and they have 4 or 5 different student loans. Sometimes it pays to combine all the student loans, and you could save a lot of money because one student loan might be 8%, 9%, the other might be 6%. If you combine them into one payment, very often you'll save money because you'll get one payment consolidation, and also you'll know exactly what your monthly bills are. If you go into a consolidation, sometimes they want a variable interest rate, which you really want to try to avoid. You want to know what your payment is every month. You don't want it to change. So when you do go in for a consolidation, make sure they don't say to you, well, it's a variable rate. It's based on the prime. It's going to go up. It's going to go down. No, I want a fixed rate. I want to know what my bills are every month. And that's exactly what I would do for a consolidation. And if you can save enough money, then the benefit that you're losing by not having a federal loan could be worth it. So you have to really analyze what the savings are, what the pros, what the cons are. And remember, I'm just talking generally to people. This is not a channel that you should just turn around and take blanket advice from anyone, from me, from anyone else. This is just I'm giving ideas to you. So this way I put it in your head. And when you decide what you want to do, you remember, hey, that Ed the finance guy, he said I should do this. And at least it's different views that you get. But it's very important, especially when you're young. You think, of course, you know, the world is your oyster. You're going to get a $500,000 a year job. It doesn't always work out like that. So maybe you're thinking you're going to get a great job, which is fantastic. It's good to be positive, but you'd always look at the other side, that maybe you can't get that plum job, that you can afford this $600 a month payment. And maybe I could somehow lower the payment by going to another company, or I can do something different. Maybe I don't have to go to Harvard and spend $100,000 a semester, and I can go to Baruch College and I can get a cheaper rate, and it'll save me money over the course of my 30 years of payments. It'll save me a lot of money. So the thing is, when you're going to decide what you're doing as far as going to college, make sure that you have a plan. Write down what you want to do for a living. Look around, see what kind of salaries are in that field. You want to be a computer analyst? Well, let me look on Google and see. What does the average computer analyst make? They're only making $60,000, $70,000 a year. I better not spend $800,000 on my college cost. So try to have a plan and review everything and know this decision that you make will affect the rest of your life. This is a very, very long-term debt that you're going to have that you're taking on, and you got to make sure you know exactly what you're doing. I want to thank everybody for listening. I really appreciate it. Please comment below any suggestions you might have for what topics you want to hear. We greatly appreciate it. This is Ed the Finance Guy, and remember, be safe, be smart, subscribe. See you next time.